Hello everyone, guys. I am bullish on the market. I just bought into SPY calls, IWM calls, and gold calls. In today's video, I'm going to explain to you guys why I'm bullish. It's pretty simple, but I'm going to give you guys a detailed explanation of the entire market. We're going to take a look at the S&P, the NASDAQ, the Russell, the dollar, the bonds, the VIX, the yields, and the large tech stocks. All right, so without further ado, let's get started with the video. Okay, guys, number one, we're seeing strength out of the tech stocks. When you see strength out of the tech stocks, regardless of what's going on with the bonds, anything, if equities, if the large tech stocks and the NASDAQ in general is showing strength or showing things that support and showing some strength off of those levels, you cannot be bearish on the market. Okay. And we saw in the past back here when the SPY, so this is a daily chart of the SPY. Okay. Back here, when the SPY was trading at 443, we used the strength in the tech stocks as a reason to buy this dip and to go long. So we rode and we were bullish on the market from 443. Down here, when everyone was talking about being bearish, we were bullish because what did we see? We saw strength out of the large tech stocks. So similarly to this situation right now, clearly, right? This is not the most bullish setup. Things look pretty disastrous on the SPY. Things look pretty bearish on the IWM as well, right? But what we see right now on the NASDAQ, and what we do see on smaller time frames as well, is, guys, when you see a huge move to the downside like this, the initial pop upwards, what do I always say? You never short the initial pop upwards. Instead, you try to buy the dips and you go long as well. So we're also holding on to NASDAQ calls as well. So what we're seeing right now is the NASDAQ is clearly showing strength here, outperforming the rest of the market. The NASDAQ is 0.83% green. The IWM was obviously, it was 1.8% red at one point. And the SPY was also flat for the day. But it's very, very, very bullish that the NASDAQ is the NASDAQ stocks are showing strength. So starting with the chips, Nvidia skyrocketing, showing so much freaking strength. The chips are showing a lot of strength. And just once again, guys, I cannot explain how important it is that the large tech stocks are showing strength like this, because any single time that there is bearishness with the dollar or the yields or the bonds, if there's weakness in those instruments, but the large tech stocks, like the equities, the stocks themselves, if those are showing strength, then that oftentimes that nullifies everything else. So we're seeing Nvidia strength, right? AMD obviously also some strength. SMH, the ETF for the chips, showing strength. Cool. Google, I've been talking about Google being bullish since here. It just filled the gap, made a new high. Google is bullish as well. Microsoft, bullish, right? So what we're seeing here is these large tech stocks are either holding support or they're bullish. Microsoft, bullish. Apple, bullish. Held support at 170, started to fly upwards, bullish. Tesla, holding support, not as much strength as the others, but it's still strong. Amazon, showing some strength. Netflix, starting to bounce up as well. Facebook, starting to show some strength, etc. These large tech stocks are leading and showing strength. And as long as that is the case, it is very, very difficult to be bearish on the market. So right now, we bought into calls down here, I think at 426, etc. I'm not really sure, but we bought in right before the end of day spike on the SPY and the IWM. So things are looking good. So once again, guys, this is the same concept. This is the first bounce upwards after a huge move to the downside. And when we're day trading on a 1 minute time frame, you never go short on any of these levels. Instead, you look to buy the dips for a move to the upside. And yeah, we held the 427 level. We held this trend line. The NASDAQ is looking super, super bullish. The IWM is in a falling wedge pattern. It's in a daily falling wedge pattern here, the IWM. Falling wedges are extremely bullish. It's a falling wedge right close to this 173 level. The IWM, yes, it could fall back down and retest this 173 level again tomorrow. But this is a falling wedge pattern. Falling wedges are extremely, extremely bullish patterns. So equities are looking like there could be a bit of a bounce, and that is more than what we could have asked for. And once again, it's led by tech. So when tech leads it, guys, like we've seen time and time again, this was just a few weeks ago. We saw tech was leading. The rest of the market looked garbage. But we fell down to that 443 level. Very, very major level of support on the SPY. I was blindingly bullish because the tech stocks were showing strength. Everyone was like, this is not a time to be bullish, blah, blah, blah. Ended up working. 443 to 450. I was back here. Remember, guys, I was saying 443 was the buying point. I was saying 447 would be a good point to take profits and start looking to go short. Boom, we ended up hitting 447 within a few days, and worked out. Everything worked out. Once again, we're seeing a repeat of history. Let's see. But for now, we cannot go short when the large tech stocks are showing strength. Okay. So with that being said, that is my thought process for equities and everything. To give some added boost to everything and to give some added context to the rest of the market, we could take a look at the VIX, the yields, the dollar, and the bonds. All right. All right, look, guys, I'm going to make this very, very nice, quick, and simple. All right, let's take a look at the dollar. The dollar has an inverse relationship to the market. When the dollar is rising, it's generally a bearish. When the dollar is rising, it's generally a bearish sign for the market. What we're seeing right now is the dollar is starting to creep up above this uptrend level that has been acting as a resistance. Now it's starting to close above, right? So technically, that's not very, very bullish for the market. When the dollar shows this much strength, it's not bullish for the market. And especially as it's closing above the uptrend level, we're starting to get pretty overextended. Let's see what happens. But right now, the dollar pragmatically is showing strength. This is not a bullish factor for the market. Okay. Sure. Great. Now let's take a look at the VIX. So the VIX, I was showing how yesterday there was room for a bit of a bounce on the VIX because we were holding support, and then this, we had a green candle. There was a bit of an opportunity for a bit of a small bounce on the VIX. That's basically what ended up happening, and we failed at these prior levels of resistance, and it looks like this is going to end up being a continued move to the downside. So the VIX is important to look at because the VIX also has an inverse relationship to the market. If the VIX is falling, then that is good for the market, similar to the dollar. Okay, and we just saw that the VIX crossed down lower on the MACD. So as it crosses lower for 1 to 2 days afterward, it is usually neutral or bearish price action on the VIX. And if there is bearish price action on the VIX, then it is bullish for the overall market. So the VIX, neutral to bearish. Okay. Next, let's take a look at the bonds. So the bonds are important because they have a bit of a correlated relationship to the market. The bonds are not showing that much strength, and they haven't been as clearly defined in terms of like sensitivity to the price movement to equities. So the bonds, they're not as cleanly they're not acting as clean in terms of strength and weakness. So we've seen tons of weakness in the past few days, past few weeks on the bonds. We need to see some like monstrous bullish strength on the bonds, and then the correlation with the bonds and the stocks will probably start to show in the stock market again. But right now, the bonds are just showing tons of weakness, and that has a lot to do with the yields. So the yields work a bit better. So let's take a look at the yields. Let's start by looking at the 10-year yield. So the yields are important because they have an inverse relationship to the market. So we're looking at things that have not just the direct correlations to the market. We're not just looking at the market itself. We're looking at other instruments with their correlations. So the yields have an inverse relationship to the market, similar to the dollar and the VIX. So right now, the yields, the 10-year yield is showing some strength. We're getting at this level of resistance, closing and creeping outside of the upper level of the Bollinger Bands. 10-year yield is showing some strength. See the 20-year yield also skyrocketing, showing some strength at a level of resistance. Let's take a look at the 30-year yield. Same concept. So the longer dated yields showing some strength. Let's take a look at the shorter dated yields. They're bouncing, but once again, this is a bearish setup. So the momentum currently is still bearish on the 2-year yield. Let's take a look at the 5-year yield. The 5-year yield looks way better than the 2-year yield, and it's bouncing. 5-year yield as a whole looks the most bullish out of all of the yields. So pragmatically, the yields as a whole, they're showing some strength and they're at levels of resistance. So it's, you can't really say that the yields don't look good. The yields look bullish at the moment. So with that being said, with the yields being bullish and the dollar also somewhat being bullish, that is bearish. Those are bearish things for the market. But in terms of price action and in terms of the way that equities are moving, I am bullish because the tech stocks are showing bullishness. And it is what it is. A trade is a trade. And seasonality wise, we also bottom out in October. And then October, November, December, we end up closing green. So I really, really think that towards the end of the year, the SPY will trade above 430 by the end of the year. And I'm pretty positive about that happening. I'd be very, very shocked if that's not the case. But that is something that I think will end up happening. All right. So you can quote me on that. But I'm not your financial advisor. This is not financial advice. I hope you guys have a wonderful rest of your day. Take care. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.